Good day with Travis. Today is August 4th, Monday, and of course, nothing's ever slow on the market these days. Today was a big day for the PCE, which is the Personal Consumption Expenditure Index, or report that comes out, and it basically measures inflation and inflationary pressures, how we're doing with cost of goods, oil, food, and different things that we buy on a daily basis. Well, it came out at the biggest jump. 0.8 was the jump for 1 month. And that's a worst jump in, what did I say, 28 years? 27 years. So to think over 27 years of all the things that have happened economically to us through different presidencies and different things, to think this is the worst jump in 27 years, it kind of tells you what kind of state we're in as far as gas prices and so on. So that should have been a real market mover for the bad for mortgage bonds especially. Mortgage bonds hate inflation because what happens is you buy a mortgage-backed security for 30 years. If inflation's out of control, in 30 years that bond will mean nothing to the investor. So inflation is the arch enemy of mortgage-backed securities, and they're only down about 18 basis points this morning, which is surprising because it could have been a 100 basis point or more move. And like I talked about on Friday, with the big three automakers coming in with real ugly reports, with the GM losing $6 billion in one quarter, the analysts had already kind of predicted them to have bad numbers. So typically that would be a huge number. The market couldn't absorb it, and it would directly correlate and trickle down into stock values and mortgage-backed securities, but it had been priced in. I think today's report was priced in already as well, just not that big. What I think the thing that really flattened it out this morning was the hurricane that was supposed to come into, I think it's Eduardo or something, was supposed to come into the Gulf this weekend. And that was always a threat to oil production because it hits the oil rigs, they get shut down, we don't know the damage, and so they kind of speculate and get freaked out. But it got downgraded to a tropical storm, so that dropped oil barrel price per barrel down $5 today. So we're down to 120, which is still outrageous, but it was as much as 145 a barrel up until 4 weeks ago. So we're seeing the drop in that. Again, that correlates and relates over to the dollar getting stronger. As long as oil prices are going down, the dollar will get stronger. So I think that's really flattened out this number today. What the Feds do is they remove oil and food, energy basically prices out of this core number. So the core PCE is actually everything but food and energy. And with that even, it's up 0.3, and we're outside the Fed's safe zone of, we're at 2.3 now for inflation, 2.3%, and the Feds like to stay between 1 and 2%. So anytime we're outside that zone, the Feds feel they have to take action and try to get the inflation down to at least 2%. So the Feds are actually meeting today and tomorrow. It's their meeting they have every 6 weeks, and they decide, among other things, if they're going to adjust the Fed funds rate, which then affects the prime rate. Not mortgage rates, but the prime rate. So right now there's the Fed funds futures. It's like almost like going to Vegas and gambling. There's actually a stock you can buy to determine what the Feds are going to do. It's just like gambling pretty much. And they have a 93% chance they will not raise rates tomorrow. During their announcement, 11:15 tomorrow is the announcement. But they do feel that by September there's overwhelming support that they will raise rates in the September meeting. I think it's September 17th. So be aware of that. Outside of that, the core numbers, again, outside the inflation safe zone for the Feds. Other than that, that's about it for today. I'm sure every day we'll have something interesting to report. So I appreciate you spending time listening to the video, and we'll speak to you tomorrow. Otherwise, we look forward to serving you. Have a great day and be blessed.